Good day, YouTube. This is J Money with Falling Forward Financial. Just another update here on Alphabet. Google, as probably a lot of you know watching this, their stock's going to split next month, sometime in July. I think it was July 9th. I'd have to look up the date to make sure. Seems like I did another video on Google or Alphabet a while back after they announced the split. Which I'm still surprised at the price. As you can see, it's currently in the $2,100 to $2,200 range. It was up above $3,000, I think, back in January or February, and it's just kind of slid down since then. But it works for me. This is a long-term hold, so that way it provides the opportunity to buy some more. So it is splitting, but if you don't have the $2,100, you can get it on Schwab or Robinhood or a piece on M1 Finance, or you can wait until July until it splits and see what the price is at that point in time. So probably around $100, $110, $120. But this is Alphabet stock split, the real reason it matters. This was just dated on the 20th. So it talks about how investors use the upcoming stock split to build a position, or should they? Stock splits, I can't talk today, splits, give you something to laugh at, are in the range of 2022. I also did a video on Amazon. I'll have to do an update on another one. I've been buying some Amazon here. Got some for 109, 103, 102. It's just been kind of bouncing around, so I like the price staying down. It gives me the opportunity to buy some more. And a lot of people that I've heard of have been buying some Amazon, so but they just completed their first split in more than a decade, so it was a 20-to-1 split. Tesla plans on a 3-to-1 split later this year. I think August 4th or 8th they're going to talk about it, or maybe that's the actual day that it does split. I saw it the other day. It was going to go to have a meeting on it on that day. So, and Google parent Alphabet, GOOG and GOOGL will execute a 20-for-1 split on July 1st. Right there it is. So I didn't think it was that early, but that's not too far away. Although stock splits don't affect a company's fundamentals or overall market cap, they do impact how investors feel about the stock. So a lot of people that, like I said earlier, don't have $2,000, you can buy. So like I said, if you don't have the $2,000 for a single share, which does seem outrageous, not as outrageous as the one that was $3,000 to $3,300. So Alphabet plans to fix the problem. With the shares currently trading at $21.50, company's 20-to-1 split will bring the price down to a more manageable figure of around $100. So that's going to be pretty sweet. And by lowering the price that much, Alphabet shares might attract more interest from retail investors. So here you can kind of see some of the action over the last month. Down to about the 21-25 range here. Ran back up to the 23.50. And here the last 2 weeks it's just been kind of sliding down. So, but yeah, that works for me. Keep it cheap. Works for me. Keep the stock cheap and keep it in the $100 range, and I'd rather have 20 shares instead of one share at this price. 20 shares at 100 and is much more manageable and easier to buy than just one $2,100 stock. But there you can see the market cap on this one. The days range $21.12 to $21.84. So you could pick up about a $72 swing there. And as you can see, it appreciated about $1,000, so we'll see after it splits what the price range does, so should be interesting. Volume of 2.1 billion, average volume of 1.7. So why stock splits can spark a retail investor's interest. So it kind of already went over that because it's more affordable. Not everybody has $2,000 laying around, but some people should have $100 to invest into this one. So for the average investor, high stock prices are a problem for several reasons. There's the obvious aforementioned sticker shock, but there's also the technical concern, portfolio diversification. To understand why diversification isn't an issue, consider how much money the average retail investors have in their brokerage accounts. Wealth management company Personal Capital produced a study showing that the median price balance for investors in their 20s is $10,700, and this gets the heart of the problem. Many people, young people, can't invest $2,000 in a single stock without skewing their portfolio. Most financial professionals advise capping any single stock at 5% of the portfolio's total value, so that's another good reason. So let's say if you had $10,000 and you had a $2,000 stock, that would be quite a chunk out of the $10,000, as opposed to a $100 stock. So it kind of says it right there, 5% of the portfolio's total value. Supports portfolio diversification and provides protection should a single stock experience a catastrophic one-off event. But in the case of Alphabet, 2150 stock price, your portfolio would need to have a total value of at least $43,000 to satisfy the 5% rule, and that's if you wanted to own only one share. If you owned 2 shares, you'd need a portfolio worth $86,000 to stay diversified. So you can get the gist of that there, but be much more manageable and to get it down to the 5% after it does split. One way around the problem is through fractional share trading. Many brokerages now offer investors the ability to buy smaller slices. Like I said, Schwab, M1 Finance, you can buy partial shares or slices, whatever they call it, on Robinhood, and I'm sure there's other brokerages out there that offer that as well. I don't think TD Ameritrade does, but Schwab does, but soon TD will be Schwab. So, however, if a company initiates a stock split, these fractional shares concerns are alleviated. As noted before, a lack of portfolio diversification can be an issue for younger investors who have limited amounts of capital to invest. And once you consider that many of the Alphabet's own employees are in their 20s and 30s, provides another reason the company would want to split its shares: employee compensation. Once again, cutting the price of the shares helps both the company and investors. Alphabet will be able to dole out bite-sized stock compensation. Employees will be able to balance their portfolio more effectively. So another cool reason. So be able to get some shares to their employees. So Alphabet's fundamentals remain excellent. I've always followed Alphabet. The only reason I haven't bought more is because it is so expensive, but I have been buying fractional shares, so we'll see what those do after the split. So as for the company's fundamentals, Alphabet remains a leader in the digital advertising market. It has roughly 27% market share of all digital advertising, whether it's through YouTube, Gmail, or Google search. The chances are high that you'll get shown an ad on one of Alphabet's apps or services today, and when that happens, Alphabet gets paid. So, big reason why Alphabet's revenue for the last 12 months is $270 billion, so it's just amazing. That puts Alphabet number 8 on the list of the largest American companies by revenue. To put the figure in perspective, Alphabet's revenue is a few $1 billion more than the combined total sales of Ford and GM. So that's just amazing. I'm sure everybody watching has heard of Ford and GM, so which are big companies, but they're small compared to something like Google. So Alphabet's not done growing. The company is increasing revenue by 23% year over year. So once it does split, I'm planning to buy up a bunch more of Google, and it's forever hold. Despite these rock-solid fundamentals, the stock is down 27% year to date, so benefit for me. Investors who want to own the company for the long term would be wise to use the stock split to build a position, and now they'll be able to do sell without putting all their eggs in Alphabet basket. So my hope is to buy it for $100, and it runs back up to $2,000 to $3,000 in the next couple of years. We'll just see how long that takes for that to happen. So, but if you have Google, go ahead and list that in the comments, or if you're waiting to buy it after the split, should be around $100. So we'll just have to wait and see. It hasn't really run up, so I'm assuming it'll stay around the $2,100 range, and if that's the case, it should be around 100 to anywhere from 100 to 150. So it'd be nice if it was under $100, but I don't foresee that happening. But like I said, if you haven't smashed that like button yet, go ahead and hit that for me, as well as subscribing. And again, I don't give tax, legal, or trading advice, just stating my opinion about Google. And if there's any other stocks out there you feel should split, you could take a look at those and make a video. But Amazon already has, Shopify's in the works, Tesla is talking about it again. I've heard rumors of Costco, so might have to do a updated video on Costco as well. But that's it for Alphabet or Google. And if you have either one of these, you can list that in the comments, and we'll see if they add another ticker after it splits. That's why there's two tickers, because it's split, and that's to my understanding. So and if you haven't smashed that like button yet, go ahead and hit that for me, as well as subscribing. I got a couple more videos, some more ideas in the works to turn out here, and if there's any videos you want me to make, just leave a ticker in the comments, and I'll do my best to make a video on it. So again, this is J Money, following Ford Financial. Happy trading, happy investing, stay green. Cheers.